afternoon, traders. It is Sunday, the 18th of July, 2021. I'm speaking to you today from London. It's a bit of a baking day, but I think we're probably going to get some thunderclouds and rain later on. And just having a look at the week ahead. I'm not really, last week was really an iffy week. I was still up for the week. There was some, but I would have to say that the conditions were really not great overall, and where a lot of charts were potentially could have provided opportunities, they didn't ultimately produce. So this week I'm hoping that won't necessarily be the case, but there is a very real possibility it'll just continue to be a bit kind of just muddy. And so I would, my approach will be to focus. It just means there'll be fewer trades, but where they are, the conditions will probably be better. But I am expecting, because we have coming up on Thursday, out of the central bank, some news that will potentially, at least could potentially create some movements on the euro pairs. The pairs that I'm liking the look of in principle are going to be some of the Aussie pairs, CAD pairs, and yen pairs, and they look as though they may well have some good moves. When it comes to the majors, we're really going to have to play that as it lies, because those conditions are still basically, it's a fluid situation is the best way that I can think to describe it. So now having a look at the currency, starting off with the majors, starting off specifically with the US dollar index. It is still creeping its way up towards 93. What I was looking for last week was to connect to 93 and then potentially have a bit of a retracement, or potentially actually ultimately what it did was it just kind of messed around a little bit. I was looking, sorry, I beg your pardon, I was looking for it to actually come back down to connect 92 a little bit and then continue onwards, but I did speak about how this is very much range-like behavior, and it still is actually range-like behavior. We're not free of that range yet. I do believe that looking at the moving averages, that the closing price is still heading up towards 93. So there is, if it's a ratio, it's probably 55-45 with the buyers in control. So it is pushing to the upside. We might get a breakout this week. Perhaps that might happen if we get some news on the euro, for example, like something that can just breach that key level. But we are absolutely range bound. Let me just frame it so that you can see it. There's no doubt that the market is still kind of trapped in this area, and therefore I'm going to exercise some caution there. Overall, still see that this week, certainly last week, closed as a nice solid candle, so I do think we are closer perhaps to 93 this week. Then we did hit a little bit lower before heading higher, so we got a little bit of kind of that, but again, not fantastic. Looking here at the euro against the US dollar, does look as though it's trending lower. It's not very aggressive, but again, you kind of, if you look at it here on a monthly basis, in this case also it is kind of, at least currently, I would define that as stuck within a range. And so all I mean when I say that is that I'm going to probably just keep in mind that the price is probably going to head down to this point, and then we'll assess what's going to happen there. Looking at cable, this does look indeed as though it wants to come back down and test this level of support. So if it does break lower, that supports the idea of a stronger US dollar, as does the euro heading lower. The Australian dollar against the US dollar has broken through this level of support, and in fact, of the ones so far, this one to me looks as though it offers some real trading opportunities. There's also Aussie Kiwi and Aussie CAD I'll get to in a moment when it comes to currency pairs of interest, but certainly Aussie dollar, US dollar for me, AU, is on my list of tradable assets this week, or instruments, whichever way you want to put it, phrase it. I'm liking the look of that down to 73.50. Kiwi dollar, US dollar, very much range bound, as you can see, and I think likely, of course, if the other majors tend to go the way of a stronger dollar, we're going to see Kiwi head lower, but it'll still come back down to the bottom of its existing range. So so far, the best one is Australian dollar against US dollar. Then having a look at dollar yen, trying to find some support here. If indeed there is obviously then a stronger US dollar, it's likely to push this up a little bit higher. So I think it makes sense at this point for me at least to accept the possibility here that dollar yen is going to break the high of Friday and attempt to come back up to 110.60, and then potentially onwards from that point. Dollar Swissy looking as though that's a really nice strong bullish test of previous support in that market structure there. And it's back over the previous weekly resistance level, breaking some fresh highs here. So I do think this has now got some potential to continue up a little bit higher there. Dollar CAD, certainly nice and bullish. Again, I like the look of this. I'm just going to highlight here. Market structure, nice little bit of level there. Actually, let me put that in on the daily. All right, keep an eye on that. But yeah, I like the look of this. There's still some room for it to potentially head up to 1.3. And a 382 retracement or a 50 foot retracement from these old highs up here, or even from the previous lows, but I quite like the look of that. So that is going to be on my watch list for some potential opportunities. And to be fair, the last 2-3 weeks dollar CAD has paid out. It's been a very good pair to trade. All right, moving on to currency pairs of interest. Okay, so here, what I want to highlight here is, and of course I didn't speak about it last week, but the yen pairs were very much overdue for a deeper correction on their monthly uptrends, and so they look very much as though they're all heading down towards moving averages. There is some possibility, I can see there's just a bit of a level, market structure level there, but there is a possibility of this heading a little bit lower. The ones that I like the most currently are Euro Yen, so I will keep an eye on that. There's a level here. I'm just going to mark that again, so there's a bit of a level here I want to keep an eye on. Once we break through that, any continuations for me might be of interest. CAD yen as well, I like this because it's started to break through these old highs heading down. The next lows are quite a bit lower, down towards 85, and therefore there is some good opportunity to head a little bit lower, and therefore there's some continuation trading opportunities there. Then on to EURCAD, GBPCAD, KiwiCAD, so these are the CAD crosses. EURCAD broken outside of its range, breaking to the upside, looks pretty good, broken out of the consolidation range on the weekly, now looking nice and bullish, and has started officially started this monthly correction to the upside, and a really nice strong bullish candle so far. GBPCAD also breaking out of its range, now in a confirmed uptrend on the weekly. Looks like a nightmare on the monthly, so there is risk in it from that perspective, but I do like the look of it. So I do think some pullbacks into previous highs or in terms of market structures would find some good buy opportunities for me on that side to the upside. Same as with EURCAD. Then we have KiwiCAD. Love this. Watching how market is just how the price has just slowed down here, started to accelerate to the upside. Looks really nice and bullish from this perspective. We've got a confirmed swing low on the monthly. And the most major key level that I can identify is quite a bit, a little bit further away, and therefore I do think there's some room to run if it's going to return back up to 0.9, and so I like the look of that. Then Pound Aussie, also having broken through its level of resistance. That is currently a very nice, strong, bullish monthly candle, and it should have some room. I mean, I noticed there's a bit of, there's been some activity in this area before within this range. But hopefully that means it is free. It's going to be able to work its way up to 1.9, which is going to give me some potential profits on that, on nice pullbacks intraday and perhaps swing. Then Aussie Kiwi and Aussie Swissy. So again, there's some correlation here. The pairs that are looking attractive are Aussie pairs, the yen crosses, the CAD crosses, and perhaps again the Aussie pairs. So this looking really good. Broken through a strong level of support, 106.40. Next level down is 105 on the monthly time frame, and so therefore retracements and moves down to the downside should offer some opportunities. And there are times when Aussie Kiwi is tradable, but I would say that probably 70% of the time it's just too choppy, and so that's why I'm always a little bit more cautious on it. Aussie Swissy actually respecting some of these levels, so that's great. I like to see that. It is within a monthly uptrend, but it does look as though it has some room to come down to. There's some possible weekly support in its near future, but certainly there is a possibility here for it to head a little bit lower, especially taking into account dollar Swissy as well. So we'll see how those go. A little bit less in love with Aussie Swissy. I do like Aussie Kiwi, and I do prefer the others within this list. Okay, so that's it for currencies of interest. Now moving on to the precious metals and commodities, looking at gold. Gold did manage to break a little bit high. That's good. As I said, I'm in the longer term more I'm still bullish at this point, but there's no doubt that every time it has a big move up, if the dollar has a particular day or something, there's a bit of a knockback. There was a fantastic breakout of this flat level on the lower time frames, 4-hour time frames. Really nice and profitable, and I do think now that we've potentially broken out of this, if we can produce a bullish candle on monthly, there might be a signal then if we follow through this week that there could be a move up to 1850. What I do want to mention, however, this is where the caution comes from. Platinum took a knock back. Okay, so that is now potentially setting up as a bit of an indecision or bearish setup on that side. It is in an uptrend on the monthly. This in isolation is a valid indication of buyers coming back in, moving into the upside, but I am still a little bit cautious. For example, when I look at, say, copper as well, copper is also a bit of a knockback. I think that could have some, we're still consolidating here on the daily, and a break lower here could indicate that it does actually want to head down towards the moving averages in this area. So what I'm saying is, although I am in principle still bullish on gold, I am approaching with some caution. It does tend to get knocked back quite a lot more than one would expect if the market was really strong. Moving on to crude oils. Look at West Texas, lower high on the daily. We've started to head a little bit lower. There's a solid, well, so far currently a nice little spinning top, little indecision candle forming against 75 against historical resistance. This could, so far, just could be a potential swing high in the making, which means that in the coming months there could be a move to the downside. However, I will just, let's see how that goes. What I'm looking for this week is to see how price reacts in this area. Does it come back down towards 65 or does it produce a bullish candle? And so I'll be watching the 4-hour time frames to see if the 4-hour downtrend ultimately becomes an uptrend that could then support the idea that by the end of the week, in about 6 days time, we finish with a nice bullish candle. We'll see how that goes. On Brent, again, also I'll be looking to see if that heads a little bit lower, that weekly candle close to the moving averages. So in other words, it wouldn't really have to do a lot, just kind of hover around in this area this week and then finish a little bit higher to produce a nice little bullish candle, which would indicate it wants to head off and try and break through this resistance level and make it support and then head on higher. I'm just highlighting it's had a really long run without taking a break. It's particularly low on energy, no pun intended, just in terms of movement in the markets, and so therefore price movement, and therefore a nice correction from here down towards 60 would be, welcome, be a good thing, not a bad thing. Now moving on to the major global indices as well, the US indices. So I spoke last week about how this was high risk for me, just looking to see how the market might react to that. So the market attempted to climb a little bit higher, fell down a bit, then a bit of an indecision candle, and then a sort of hanging man, kind of attempting, not going anywhere, and then moved down on Friday. So incredibly choppy on the intraday trading sort of time frames, and also continuing to find resistance on the weekly. Okay, not looking ideal. And so definitely encountering some resistance there, which is not a great indication. It's had a long run so far, almost 3 months. The Dow has not really continued on. It's no doubt in my mind that if it had a correction here, that would again be very good for the markets to do that, so that they then can resume a bit of a bull run as we head into the second half, or I was going to say into the second half of the year. What I mean to say is probably into the final quarter of the year. So again, my risk is, again, I'm very going to be very cautious. I probably and potentially I did take a short on the DAX. I'll talk to you about that in a moment. But yeah, this is also, a kind of a drop down last week, then a move up, and then a correction and kind of closing back down. So a bit of a bearish candle for me there, not really succeeding in closing any bit higher, and also sort of currently potentially forming a bit of an indecision candle there, / rejection candle. All of those hinting at the possibility that this week there is the very real possibility the market might head a little bit lower. I don't think there's a shortage of bulls or buyers present, so I do think there will be moves to the upside. But yes, you can see the difference where here we get pushed right back up. There's a solid rejection, but here we're starting to actually close lower. So the bears are actually managing to maintain their hold to the downside. Okay, but again, there's that sort of indecision spinning top type rejection / rejection candle forming there, just not, and these often obviously exist, they are birthed in the areas where we kind of turn around, and this forming a little bit of a bearish candle here, which could indicate a swing high. This week, especially if we break the low of that, there might actually be a move lower. So, cards on the table. I'm keeping in mind that, of course, in principle, we're still in a bull market, and therefore buyers always exist. And the risk is very high when deciding to short a market in a bull run. It's very dangerous. Most people lose their money that way. For me, my approach is going to be breaks of key levels, making sure that if I do short the markets, that I make sure that I've got, I try to get to 1-to-1 as quickly as possible, take some profits off the table, update my stop loss, and just be prepared. Don't take it personally if buyers step in and push the market back up and ends up closing higher. So remembering that we're still in an uptrend on the weekly, we're still in an uptrend on the monthly. It's just that daily that's starting to look a little bit weak, and therefore intraday opportunities could potentially exist to the downside if that correction continues. Look at the Russell 2000, you can see, look at the difference here. Look at all the rejections, all the buyers coming in, pushing back up, pushing back up, pushing back up. They're not here anymore. And so that looks pretty good. I'd like to see how we react as we come down into these major levels and see if the market is capable of surviving that, or if it's going to break through that and continue to head lower. So really, looking at this monthly here, you can start to see finally, and this has been, overdue. We were kind of talking about this for a couple of months now, just seeing that ideally here, and it's not really about being right. Obviously, a broken clock can be right twice a day. This is about kind of knowing that at some point there's going to be a healthy pullback or a retracement or a correction, and it looks as though this might actually be that happening, and it's not a bad thing. It means there could be some shorter term trades to the downside, and then once the kind of buyers step back in, if it's going to resume back into an uptrend, it's let off some steam, and then what that actually does is provide some good buying opportunities going forwards. So the FTSE as well, starting to top out a little bit right at 7,000. That makes sense. Nice round number. Just look at it failing there repeatedly on the weekly time frame. Just wanted to let some steam off. Let's see if the buyers can come back in and push it back to the upside, if they are capable of doing that. But there's what we're seeing here, or what I'm seeing here in the price action, is way more bearishness than in previous weeks. Okay, just saying that there's more sellers present. Looking at the Euro stock, so what I did, just to go back, sorry, on the DAX, yeah, I took a break of a level up here. So on intraday time frames, looking for a break at this level, and it continued down, so looking pretty good. But as we approach these levels, obviously I've already taken some profits, but as we approach these levels, always cautious because there are buy orders sitting there. Looking at the Euro stocks, strong resistance up there. This could lead, ultimately to be fair, lead to a breakout. But given the kind of overextension as well as the US markets, yeah, look at this kind of bearish divergence happening here. The RSI is relatively flat. MACD is looking quite bearish. So there is still a possibility, especially if we break these lows, there could be a move down to these lower highs, just a bit of a drop. So it just means exercising caution and common sense. Then looking, for example, the Nikkei, you can see it really looking way more bearish. This looking very much intent on breaking this level. But at the same time, it's not as overextended. It's also kind of let some steam off. And if it wants to set up as a bullish market here, so for example, let's say it does manage to drop through in the rest of the markets, if the rest of the markets head lower, but then by the end of the week manages to close higher, it'll produce a beautiful little bullish candle here, and then potentially that could be an indication that the week after the markets have let off some steam and they're ready to try to recover. So we'll see how that goes, just kind of mapping that out. Last one on my list, looking at the Australian ASX. Okay, again, 4 or 5 weeks going sideways, not really gaining any new ground, struggling a lot with that level, almost very close to 7.4, but it's almost 7.380, just struggling. And any kind of a retest of these levels for me would be acceptable potential areas where buyers could come back in and we could start to see a trend from the daily starting to go from a downtrend back into an uptrend. Looking at the stocks of the equities of interest, starting off with American Express, which has been a star performer. This now producing, this is the first kind of bearish, a little bit of a gravestone doji forming, a little bit more bearish than this. We've got a hanging man and a gravestone, indecision candles. A lot of this collectively saying, I'm kind of thinking of taking a bit of a breather. Okay, so that seems to be a strong indication, resistance here as well, that this market is likely to have a bit of a correction. I think it's fair to say if it does do it, that it's not, the minimum reasonable expectation is kind of back in towards 163, potentially even just back into these old highs, which is 165. If it heads a little bit further, we'll look towards 160. So I don't expect it to be too aggressive, but we'll have to have a look. ARC Innovation, which, the setup is a really nice kind of buy setup, and again, and in principle, I'm still quite happy on this, but however, this has not followed through very well. So last month followed through beautifully. This month so far, although it has produced a higher high, breaking through that, this kind of a correction is not ideal. What it does indicate is that, of course, if the FANGs are going to have a big, major correction, or some of the other indices are going to have a correction, it's going to impact even the best. So we'll have to see how that goes, but that does not necessarily bode that well. So this week I'll be looking to see if we can stay above that 107 level, see how that goes. Berkshire Hathaway. Continuing to just kind of tread water here. Again, that's not a very bullish signal there, and again we've almost broken that low. So I think for me it's going to be very important to see if we do potentially break this low here. If I just mark that down as that being possibly the low of that, and see if we do get through that. We'll have to see. And then if it is going to be the case, then I expect 250 is on the cards, if that's going to be this week or if it's going to be at some point in the future. But again, I still like the idea of these kind of letting off some steam now and then picking up back again as we go towards the tail end of the year. Again here, really, BP, no surprise, we spoke about this, not really that in such a great condition, and really letting off a lot of pressure there. So this was setting up pretty much from the get-go, and that's so this is to expectation, I would say. And I don't think it's finished yet. Certainly if the rest of the markets are going to head low, it's going to as well, but it is in an area where there could be some potential support. So let me do that, just kind of mark that up as a possible area of support and see if it manages to hold. But if it drops through that, it's almost certainly then heading down quite a bit. Coca-Cola, looking good, continue to push to all-time highs, but just noticing that MACD is continuing to go down. RSI here, still managing to tread water. I prefer when both of them are bearish. The RSI is actually nice and bullish at this point. That monthly looks good, but is coming into all-time highs here, taking note. And let's have a look at this just to see if there's any divergence, and there is. So we've got a higher high here. The MACD is producing divergence. The RSI, actually in this particular situation, this looks more bearish than bullish. So that's going to be interesting to me to see if this then has a deeper correction and comes back down to these lows by the end of next week. ExxonMobil, it'll be similar to BP. That's going to take a hit, so that's not really a surprise. This was on our amber list, meaning expecting it's not as strong as the green list. General Motors on our amber list as well. There we go. Great examples of exhaustion there. This almost certainly has 50 in its future. If it does fall through that, if we're going to get a bigger correction, it's got 40 in its future. JP Morgan. All right, this one's struggling. Look at that beautiful full-bodied red bearish candle just after a hanging man. So a lot of this indicating that possibility of a deeper move to the downside. Again, I think this one has got 140 in its future. All right, so let's see how that does going through these levels of fall. And that could be this week. Might only be next week. There's no immediate rush on it, but starting to look at. Then looking at Morgan Stanley, just topping out. This is a natural thing. At some point, it would be beautiful for this to come back to 80. Again, have the moving averages come up to meet it and find some good support. If it came down a bit further, that's fine. And the question is that going to be this week? Finding some strong resistance there. That is a possibility. If nothing else, it's starting to trip up, which means that if it isn't this week, it is potentially then 2-3 weeks from now, starting to trip up on the weekly. Beautiful, nice weekly, really great correction on that. And I say it's a really great one because, again, this week could settle around 700, recover, and then start to climb from there. This is a buying opportunity in terms of, well, this is now on the list for buying opportunities for a blue chip, in my opinion. For me, not financial advice, not telling you guys to go and do it, but that's what I quite like the look of it. I'd be happier to see it come down to 600. However, anywhere down towards even halfway, 650, 700, this is where I would like to see if this is going to be a sort of a medium-term correction, then these are the areas where I think they'll probably stall or find their footings. PayPal. All right, PayPal's still holding up pretty much on the daily, but there we go. There is that weekly second sort of indication of resistance at that level, sort of let's call it 3.8, 308, 310. And so a break of the low of this could, again, also support the idea of it coming down towards these lows. So there's some hints that this week could show. So last week I was saying it's volatile. There could be a potential sort of moves to the downside. Now I'm thinking if we get a continuation of those moves this week, they could start to pick up pace. It's possible. Again here, letting down sort of some of that, letting off some of that steam. So this is Royal Mail in the UK. I think this has got that potential of 500 in its future. We'll see how that goes. Possibly even if we're going to get a bigger correction down towards 400, so we'll see. But certainly back into these old highs is my first kind of next, or at least that's my next area where I'm looking for it to do that. Spider, this was something where I was looking for that bullish, similar to ARC. I was liking this kind of setup here. If we broke the high of that to be an entry opportunity, it isn't really doing much. It's kind of heading a little bit lower. In fact, here I'm now kind of looking at this. There's a possibility it's going to head back down to 120. It is a possibility, especially if this level doesn't hold. Okay, I'm just going to mark that quickly. But yeah, that is a possibility. So this week could be scary in the media. It's possible it's going to be scary if it starts to hit low across the board. The media is going to sort of potentially comment on and almost certainly link it to, they'll use the term, the tag they'll use will be inflation. But at the same time, yeah, sure, we are a little bit top heavy. We need to let some of that steam off, absolutely. Tesla. All right, so Tesla, again, in this area saying it could find some support. But if the rest of the markets do head lower, I certainly think it's feasible to see Tesla down towards 540. Where this gets really interesting, if that is the case, should the market head down to 540 and then produce a swing low, then kind of what could be happening, could be on the cards, and this is speaking well into the future towards October, December, is that the markets, if it is unable to break these previous highs and starts to produce a low high coming back down towards those levels, it then starts to set up as a potential bearish breakout to the downside. And if it does a breakout to the downside, it's got 400 in its future. So that is very interesting to me. So I'm going to map that out and just kind of see if that goes, if that's the case. This is, please let me emphasize again that this is only, I think really if we then subsequently produce a lower high. So we need to kind of produce a lower high, and then it becomes a possibility that we start to have maybe have 400 in its future. It becomes more likely, excuse me, it becomes more likely if we produce, say, a third bounce that starts to close near the lows, then it becomes a real possibility. But the alternative is it comes back down to this level in the near future and then breaks up and breaks these highs and goes back into its longer term uptrend, and everybody's happy. And how close it came to breaking down never really shows up, materializes. Looking again at Vanguard, so Vanguard's still doing well, but you know it moved up and almost within a week, actually almost came back, gave a lot of that back, so it's starting to top out for sure. This one, I'm thinking it's got somewhere between 390 down to 380 in its near future, potentially this week. But that monthly showing that if it does start a swing high, we've got 350, even potentially as far as 320 to 300, but probably 320 to 350 in its future. So this is exciting to me because I would love to see the markets have a deeper correction, and they often do. You know, we often have it, and then it recovers kind of November, December, and January, February, March, and it tends to do really well. So if it's going to happen now, it's going to happen now. We will see. That's it on equities of interest. Thank you. Okay, so now on to treasuries and bonds, and we can see, as we kind of discussed last week, pullbacks into nice bullish candles. And a continuation to the upside, and again this as spoken about last week, and this is nice. It's a little bit sort of old-fashioned, traditional to seeing to kind of see a shift from equities to bonds, and so it just is some inverse correlation. Yeah, nice to see. This has been going really nowhere until the last couple of weeks and has now started to climb aggressively. Again, if equities are going to drop, my expectation reasonably is that bonds, especially the 10-year, the Euro bubble, Euro Bunt, all of these, my expectation is they'll continue. They've got some room to go, and lots of room to run to the upside. There's no reason rationally why they won't move to the upside. So that could provide some good buying opportunities there as well. Now on to the last asset class of the day, cryptocurrencies. So I spoke last week about the possibility of Bitcoin heading lower. So just a lot more activity here. It is starting to slow down a little bit, but it is creeping down towards 30,000. I'll be looking to see if we do start to break through these lows, especially with candles closing to the downside. Full-bodied candles closing would then be a strong indication of a breakthrough 30,000. And then in that situation, if that is it, and we close much lower, there is then the real possibility of Bitcoin heading down towards 20,000 and forming some kind of a breakout pattern over there. But this area, as I said, is really also an area buyers are potentially going to come in, but they're just not creeping in at this point in time. So what I need to see, really, to see a significant change here is to see a full-on bullish monthly candle, which it doesn't look like so far. It's going to be July. Unless July turns around and closes really high, then there could be a potential setup there. Alternatively, July is out the window. Now is going to be potentially August. But if we do break down lower, we'll see what happens there. Okay, so that is ready for me. Looking at that, essentially, it's still high risk. There's no real immediate opportunity as the market does appear to be creeping lower. I am noting here, for example, that Ethereum has still not really broken these previous lows, but it is still on a downtrend. It's coming up to test 2,000. Will it find resistance? Can it get back over that, or is it going to produce some bearish candles and head down, break these lows, and then start to creep lower? So that's, again, also looking here as though there's some potential for it to head a little bit lower down, even down towards 1640, 1650, call it. So higher risk, and I'm leaning 70-30 to the downside at this point in time. Of course, what could happen is buyers could be shocked into action or motion. What's the term? Just basically, kind of riled up into action, and then could find that they climb. Maybe they like the lows, but they don't seem to be there now. Dogecoin also trending a little bit lower, coming into these lows, and this is actually not a bad area for support, but again, also looking more and more like it wants to head down. A little bit lower. Neo, let's have a look. So Neo, as I said, this forming almost kind of a breakdown, a bearish breakout pattern. Certainly looking a little bit more like that on this side, but I think it's coming into these lows. Again, Neo, I feel, is almost fulfilled its obligation to have a strong correction here. Be a bit tragic to see it head a little bit lower than that, because for me, I think the bottom it's close to the bottom anyway. Whereas I do think a lot of the other cryptos still have plenty of room to go. It would be acceptable. Again, also similar. I think Ripple and Neo are already close to the bottom. I don't think there's necessarily that much further for them to fall, but yes, if they did have to go further, yeah, it could head down towards 50, 49, and so on, 0.49. So for me, Bitcoin is high risk for me for trading opportunities, because there are buyers sitting in these areas, but at the same time it's continuing to creep lower. I think really it'll already only pick up that bearish momentum if it can break through 30,000 and then accelerate, and then there'll be some good shorting opportunities there. And then my expectation is to see it potentially flatten out and start to recover and start to climb again. So we'll see how that goes. And that's really it from me. I hope that you are finding these instructive and useful. If you do want to see a particular instrument, you want me to do analysis of that, excuse me, or you want feedback on certain things, or you want to give me feedback, go for it. Absolutely do that. And I look forward to this week there. I do think there's going to be some good money making opportunities, and I will see you on the other side.